Hey traders, Nick from Vant Trading here, coming at you with a quick little update and preparation video for the Coinbase IPO tomorrow. I'm going to give you just a couple bit of stats on Coinbase, the IPO that's coming tomorrow, why so many people are watching it, what's so different about it, and what's so interesting about it. I'm going to give you a couple other comparative examples of how some of the other previous large IPOs traded that did a similar direct listing method, and then I'll give you some of my direct trader tips on how I would plan on trading the Coinbase IPO, where I think some of the pitfalls will be, where I think some of the value will be, and how I think many other professional traders will probably be trading this IPO. It's going to be a pretty interesting scenario out there. If you've never seen a large IPO, well, you're in for a doozy tomorrow, as there are going to be a lot of eyes on this public offering of Coinbase. And I'm going to try to keep this video succinct. I want it to be brief, informative. I'm a little late on bringing this out, but I just want to give some people a little bit of insight from someone who has professionally traded IPOs on initial public offering day for about 10 years now. So I've got a little bit of insight, got a couple of tips and tricks. Let's dive on into it. If you have any questions, comments, or concerns, drop them in the comment section below. Be sure to like this video and subscribe to our YouTube for more video updates. And always follow us on Twitter for any stock callouts. Now, let's talk about Coinbase. So first of all, the IPO is going to be tomorrow. If you don't know what an IPO is, well, you've got a little bit of catching up to do. Go look it up. Its initial public offering. The ticker is going to be COIN. Yep, pretty easy to know, pretty easy to type in. I actually believe that that does have a slight influence on a stock, how easy it is to type up the ticker and find the stock to a certain extent. It's going to be traded on the NASDAQ exchange. I believe this is the first direct listing on the NASDAQ exchange. It'll be tomorrow, obviously. We don't generally know what time. We know when they would like to have the IPO, but it's going to take several hours probably to match up the buyers and sellers and open this stock. Now, there's going to be a little over 114 million shares. Those are what are registered. And the big difference here is it is what is called a direct listing. This is not your traditional initial public offering or IPO. This is really the company is doing it all themselves. They're not hiring the underwriters. Yes, they've got Goldman and a couple other banks, I believe, working as financial analysts, but it is a pretty significant difference, and it's not something that you see very often. Some of the more notable companies we've seen do this are Spotify, Slack, and Palantir, all of which have had their time in the sun and had some fun, and were pretty interesting watching on IPO day. So first of all, before I dive on into this, let's talk a little bit about this direct listing, because some people may not be familiar with it, and it does change some things. First of all, this means that, well, let's back up, because as of months ago, the private shares of this company have been trading on the NASDAQ private market. No, I hate to inform you, if you're watching this video, you probably don't qualify to be a trader or investor on the NASDAQ private market. We're talking millions and millions of dollars in accredited investors. Generally, it's not something that anyone can just sign up for and buy those shares. This is where a lot of shares, that the employees hold and public officers hold, of non-publicly traded companies are sent back and forth and traded back and forth. Now, they do not have underwriters. That means they did not hire Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, any of those banks to go out there, underwrite, and create shares and then sell those shares to the public. Instead, what's going to happen is on IPO day, the primary underlying shares that are already there trading in the private market are just going to be sold out there, and people are going to be selling. Now, this is going to be pretty different because, first of all, when a stock typically does an IPO, a lot of the officers, the CEO, the people who hold those shares are going to be subject to a lockup period where they cannot sell their shares. This is usually not the case with a direct listing. There's not going to be this lockup period or these restrictions like you would see in an IPO there, so there could be more liquidity. There could be more selling pressure if we open up high. But there's also not going to be share dilution because you don't have all of these additional shares being created. So the supply is going to be cut, and when the supply is cut and there's not as many shares to go around, that can make a stock go pretty crazy, especially if there's outsized demand. So that's going to be pretty interesting to watch. And typically one of the risks with direct listing is you don't have these underwriters, the Morgan Stanley, the Goldman Sachs, all these guys out there shopping the shares around to investors. That's a big part of the underlying, or the underwriters, is they go out, they talk to investors, they get people interested in the stock, they get these sales on the stock, and they have the right to create more shares if there's outsized demand. They don't have this happening, but all eyes are already on this Coinbase IPO, so I don't see that part really being an issue here. So this is really just the company saving a whole lot of money, not diluting their shares, and doing it all themselves because they know they have the hype and they know they have the drive in the market right now and the demand for the shares. And so they're going to do this direct listing. The shares that have been traded on the private market are going to then be sold on the secondary market, the NASDAQ, and we're going to be off to the races. Now, currently, what's been happening with these shares in the private market, in Q1 of 2021, I saw about the shares have been trading around an average of $343 a share. I personally expect them to open up much higher. Now, the market cap for this company on open could be anywhere from 70 to 100 plus billion dollars of market cap just for this Coinbase exchange. That gives them a larger exchange than pretty much any other exchange out there. We're talking NASDAQ, the CME Group, ICE, all those guys. They've got a larger market cap just right off the bat because of hype and because of Bitcoin. One of the reasons that we're seeing this outsized hype is the recent revenue numbers. And this is the only bit of fundamentals I'm really going to touch, but in Q1 of 2021, they reported revenue of $1.8 billion. That's more than their entire revenue in 2020 alone. Obviously, Bitcoin's had a hell of a run, and we've seen a lot of outsized demand and hype from retail traders because that's really all that Coinbase does. They are one of the largest US-based crypto exchanges out there. You can buy and sell Bitcoin on there and about, I believe, 50 other cryptocurrencies, and they've seen outsized demand. There's a pretty popular analyst that a lot of people are quoting right now. His name's Gil Luria. He works at D.A. Davidson, and he just recently raised the price target expectation for these shares from $195 to over $400 after seeing those Q1 numbers. So there's obviously a lot of hype, a lot of demand, and a lot of expectations on what is going to be our first major crypto exchange to be publicly traded like this. And it's going to be a hell of a first one as well. And it's our largest US-based crypto exchange as well. So there's a lot of hype, a lot of circulation. Obviously, if you've even remotely opened your ears to the financial markets, you know that Bitcoin, Ethereum, Dogecoin, cryptocurrency in general is exploding in discussion, in popularity, and in price. And that has only further fueled this fire. Now let's take a look, because I want to keep this video moving, at a couple of the other stocks. This is Spotify. This is their initial listing day. What do you see here? You see a lot of moving down, a lot of red on the screen here. So Spotify, when they initially opened here, you can see that initial bar. They actually got a little bit of a pop, many of the stocks do, but it only went up a couple of points, pretty minuscule here. And the level I want you to always be watching is that initial opening price, because as soon as we fail that, it's usually not a good sign for a stock. And that failed. You saw a nice little support came in, and we sold off for the entire day. So despite this being Spotify, pretty big company, a lot of people were watching it and interested in it, this one sold off for the entire day. Now I want you to look at the following days. This is the daily bar or chart. So every bar here is the daily. This top red line is your kind of initial opening price. We ended up dropping pretty hard, and it took us some time to really regain our footing in here, but once we did, we then saw some interesting swing trading and investing opportunities come in. So yes, we did see that initial drop, but we did see the stock kind of rebalance itself and give us more opportunity in the future. Let's look at Palantir. This is another one that, if you've been following Wall Street Bets, GameStop, obviously had a lot of hype and expectation. Didn't do much the first day. I'm not going to show you that IPO day because it was a $10 stock and it actually didn't do much. It moved pennies. But eventually the volume pumped up. It reclaimed that $10 a share level, and it ended up soaring astronomically. It went up higher than this, but I just wanted to show you the following couple of months. So there is value in the following weeks and months. So don't feel like you're going to miss out if you don't trade on this tomorrow. If you don't feel comfortable trading on this tomorrow, there will be opportunity. Now, let's look at one more, and that is Work. Work ended up getting a good little pop here. The initial opened up, gave you a little dip here, but ended up driving up pretty healthy. You got a good couple of points. You saw that resistance step in. You had plenty of time to exit, and it really didn't make you sweat it at all if you played it on that initial drive. However, we then saw it pretty much fail over, and then from there, look what Work did. It did nothing but sell off, and Work since then has hardly ever reclaimed its IPO price. In fact, I believe they're being bought out now by Microsoft. So actually, I believe it was Salesforce. Regardless, they're finally trading over their IPO price. Not much, and that's because they're being acquired. So, sometimes these will come off and they won't return for some time, if at all. Just something to keep in mind. So now I want to show you the all-important chart. And this is a chart that you should probably have open tomorrow if you plan on trading coin, and that is Bitcoin. I've pulled up the Bitcoin futures here. It's a little easier, but you can see the astronomical drive in Bitcoin that we've seen in this last several months alone, going from 10,000 almost up to 65,000. Bitcoin is going absolutely bananas. It's not just Bitcoin, it's Ethereum, it's Dogecoin. The meme cryptos, the real cryptos, whatever, they're all getting hype and momentum right now. And this is part of the reason why we're seeing their profit rise and we're seeing all of this interest in the IPO. So I would definitely keep an eye on Bitcoin. We're already currently breaking out in expectation of this IPO, which is astronomically crazy as well and driving even more hype. Going to be more eyes on Bitcoin and more eyes on this. So enough about that. What are you watching for? What am I watching for? First of all, one thing that if you want to be trading this on the IPO day, watch where the indication is that it's going to be open and watch where that indication is traveling prior to opening up in the secondary market, aka the NASDAQ. You will get there will be blurbs out there of, oh, it looks like it's going to open up here. It looks like it's going to open up here, here, here. And that's going to be based on the supply and demand of the orders that are prepared for this to open. And so you can honestly look at that on Twitter. You can find that on news services, squawk boxes. There's all sorts of ways that you can find that information. But a rising price and indication and a rise is going to show some serious demand. But it can go too far. If it ends up going too high, you're going to see a lot of people taking profits pretty quickly. So, for example, it might initially look like it's going to open at 300. 30 minutes later, now 350, 400, 450, and eventually it could open up several hundred points higher. Who knows? Could open up lower, and that would show a lack of serious demand that was expected. So something that you want to be keeping an eye on if you're looking to be trading it right off the bat. Keep an eye on that. And you can find that in any public information, generally squawk boxes, what have you. Is the price opening up at a clean level? And I say clean level with asterisk or quotations, because if it's going to be a $400 a share company, it's going to be hard to get you really at a clean level or to worry too much about that. But say we open up at $490 a share. $500 a share might be a psychological resistance level on it, something to keep in mind. If we open at $400 a share, that could be an even more important level because it's a nice, clean, even round number. If we open up at, say, $399, that 400 could pose resistance, maybe not. It's just something to keep in mind. Now, the opening price. Once this IPO opens, I apologize. Once that IPO opens, then you need to be watching that price because, look, it is going to be a higher price stock, so you're going to get some wicks, you're going to get some volatility. You can't be treating this with hard stops, but you want to see that stock maintain that opening price. You want to see it respect that opening price and not start to drop down, because then you could have people who still held their shares start to panic out and further increase the selling down. And you don't want to be holding these when people are piling out of the way. What is the market in Bitcoin doing? Yes, you probably want to keep that in mind because this is going to be new for people. A lot of people aren't going to know what to be looking for on whether they think this is going to be going up and down. And if Bitcoin starts tanking, you might see a lot of people start to sell this stock just because they have nothing else to go off of. It's so new and fresh. Same kind of thing with the market, but generally we've seen some crazy strength in the market these last 13 days. And so generally there's probably going to be a lot of demand already, but it's going to be something that you might want to have open in the corner of the screen or just be keeping tabs on. Also, keep in mind what time of day it is that it IPOs. If this thing comes out at like noon or 1 p.m., you might have a lot of traders away from their desk, a lot of traders not paying attention. There might be an initial kind of freak out moment when it does open. It's possible. I'm not too worried about that, but it is something to keep in mind that if we open up, at 10 o'clock, 10:30, it's going to be go time, baby. There are going to be people with their fingers on the trigger. So keep that in mind. What are some trading tips I am going to give you? You do not, and probably should not, if you are an even remotely new trader, be involved right at the open. This thing could open up at $400 a share and be at $350 before you can even blink. I've seen it before. It happens all the time. It could also coincidentally go the other way, but you don't want to be caught in that FOMO. Now, money will be made in the days, weeks, and months following. So if you don't want to trade on the open, it's fine. If you miss it for some reason, it's okay. Obviously there is going to be opportunity tomorrow, But there will be following opportunities: second day plays, third day plays, investments, swing opportunities. Plenty of opportunity will be had in the following days, both on the long side and the short side. And look, on IPO day, it's probably going to be very fast and it's probably going to be very thin. So you need to be very careful and make sure you know properly what your risk is. If you think that you're buying at $400 a share and your stop's at 390, just budget yourself getting filled lower. You never know what this liquidity is going to look like and how many people are going to be trading this. It might not be a problem tomorrow. It may trade very rationally and slow, and that would be great for a lot of new and inexperienced people. But there is an opportunity and possibility that it'll be very volatile, very whippy, and a lot of wicks and thinness and slips. So keep that in mind. If you do want to play it, I always recommend, at least on that initial maybe hour of trading, play with momentum. Scale out of your positions quickly. If you're buying it and it's going higher, 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 start scaling out. Start throwing out some offers, getting some, because you don't want to be caught as it starts dropping saying, well, maybe it'll bounce, and then before you know it, it's below your opening price. That does happen. Just want to keep things realistic for you here. It could continue to drive, but we're playing momentum here. Technicals will hopefully hold up stronger initially. That's because they have nothing else to go off of on this stock. It does not have any previous technicals really. It doesn't have much fundamentals that have been reported out there. So there's still a lot of uncertainty for a lot of people out there. So technical levels that it sets up during the day of trading and the following days should hopefully respect just a little bit more. Some other trading tips I have for you: watch the end of the day. After things settle down, after that initial hype and volume dies down, sometimes those stocks will baseline, give you a little bit of consolidation, capitulation as the shares trade hands. And then finally, by the end of the day, you could get that end of day drive, that end of day sell-off, as you get kind of that end of day, like, all right, I want some shares for the end of the day to hold overnight, or I want to take some profit. So you could get some extra moves later in the day just because the stock slows down maybe 2 hours afterwards and doesn't really do anything. Doesn't mean the day is over. Shorting will probably be difficult and expensive initially. It really depends. A lot of times on IPO day and the following days, people don't want to loan out their shares for people to short. Or if they do, they're going to charge you a lot. Just something that's a possibility. Maybe contact your broker. Ask them what the protocol will be for you to get shares if you want to short. Obviously, be careful and user beware there. Many pro traders, and I use that term liberally, that I know, myself included, when we would trade IPOs like this, you would have limit on open orders already layered at the prices. You're monitoring where you think it's going to open, so that as soon as that IPO hits and starts trading, you get swept in for a whole bunch of shares long, because a lot of these traders want to get caught up in that initial pop and spike, and then they just start layering out as it pops and spikes. That's something that a lot of traders do. If traders think that this is opening up too high, they'll do the opposite. We'll see people on both sides of things, so be very cautious on something like that. But if there are pro traders, they'll probably be doing that. You'll also wait and see if the stock pulls back, maybe baselines a little bit, catches a little bit of bid and support. Then you can buy with a quick, tight stop, hopefully, and then start spraying out with momentum higher. A lot of stuff on IPOs is going to be momentum-based, technical-based. That's all you can really work off of here. One thing I want to say is be careful, be patient, and avoid FOMO. Don't get that fear of missing out. No one knows how this is going to trade. No one knows where this is going to trade, how many people are going to be in it, what the liquidity is going to look like. And if you're really, you're like, I don't want to miss the big play, you're already trading at a disadvantage because you're not trading in the right mindset. That's going to be something that could save you a pretty hefty loss. I'll be honest, in my years of trading, I've made some pretty significant losses on IPOs when I went in with the wrong mindset. I believe it might have been GoPro or one of those tech IPOs. I was down about 12,000 in the first 5 seconds of the IPO trading because I got too aggressive and I thought that there was going to be all of this hype. And that happens, but you need to make sure you are calm, collected, you know what to expect. Maybe do a little more research. There's plenty of people out there giving their opinion on the company itself and the fundamentals and all of this and all that. I don't care about that for the initial trading. I don't care about that for the days preceding. Yes, it will come into play if you're looking to invest or swing trade, but there's going to be opportunity out there. We'll see how this trades. Maybe it'll be a non-event. Maybe for some reason, despite all expectations, no one's interested in this. It doesn't move that much. The volume's light. Who knows? It's unlikely, but we need to be prepared for all scenarios. I hope that this was helpful and informative. Sorry that this went so long, but I wanted to really give you the best kind of insight that I had. If there's any other questions, again, drop them in the comments section below. I'll see you tomorrow, and as always, safe trading.